Hi and welcome to the Market Alert for Tuesday the 21st of March 2023. So yesterday all of the action went on as I made my way back to base camp, but Bitcoin, bullion and bonds yields higher as credit market rejects bank bailout bullishness. We'll see if that continues today. Are the bailouts a dud? I don't know. Only time's going to tell with this. US stocks gained as banking sector jitters eased, as Credit Suisse was bought out by USB. On Sunday evening, the Fed made an announcement about coordinated an assault on swap lines to ease banking crisis. I thought it was fine a week ago on Sunday when Biden came out, so there's no problems. Massive layoffs on deck at Credit Suisse, which tells workers bonuses will still be paid, so go to work. I'll say no more on that one. I'll leave that one with you. Record 304 billion in weekly FHLB debt issuance hints at staggering size of US bank run, which you'll see there on this little tiny chart below. And this is an interesting one as well. US studies how to guarantee all 18 trillion, just let that sink in, 18 trillion of US bank deposits. Just how bad is it? I think we're going to find out going forward. Economic news for this week. Let's have a look. Well, I was going to check, but it looks like it's having technical problems. What I can tell you is this. The market's waiting for tomorrow evening the FOMC numbers on whether the US is going to raise rates by a quarter or a half of 1%. I've never seen that before, but as it says, we've got a technical difficulty there. I've refreshed the page and nothing. So, the main event is tomorrow evening. Okay, let's move on and have a look at the markets. And we'll kick off by having a look at the Dow. So yesterday we see the Dow rallying back strongly, big move to the upside, and market trading back to the resistance level to the left there, which you can see by this line. Now, if my charts look slightly different, that's because ETX is no longer, and they had the best charts because you didn't have these horrible Sunday night little bars in the chart. I absolutely detest these. I need to find a way with the program and see if we can get rid of them because the chart looks just awful. So as it's a case, I've had to put all this together this morning. Apologies for the messy looking daily charts. I just hate them. But again, it still shows that the price action for yesterday, but that rollover at midnight irritates me beyond belief. But anyway, 32,352, and this is the state of play overnight there. You can see the market is finding resistance there. In the 30-minute chart, which looks a lot better, market sold off yesterday with the Credit Suisse catastrophe. USB bought it, and the market then moved back to the upside. Massive move yesterday. Let's just have a look at this to the end of the trading session yesterday. We moved up 850 points in the Dow in that move there. Massive move for this market. In the German DAX, also big bar yesterday. Market selling off, then coming back with high volume up on the overnight as well. Just drawing some fibs here in the right places. From this high down to this low, you can see we're nearly at the 89% retracement, 15,079. This needs to be taken out if the market is going to encounter a problem at this high, which is 15,156. And I suspect we're going to go up initially from the open today, which you can see they're already attempting to do. This is 10 minutes before the open. A bit late today, but again yesterday you can see the Credit Suisse sell-off in the pre-market, then obviously the announcement, and then the market moving to the upside. And a massive move yesterday in the German DAX as well. We go to the end of the session. You will see we had 533 points. So massive move again on the DAX. And also putting that in at the moment above the high. R1 is likely to be the next upside target. It's 15112. Go back to the daily chart there. 5-1, so we're going to get 5-1-1-2, so that is another 50 points plus above, so that's the sort of area where there'll be some resistance if the market just rallies straight up from the start. Meanwhile, in the 5-minute chart, we're already moving. We haven't got the futures open yet, but we've already just moved up 50 odd points by the looks of things, so doing their best to bring this market back up on again, intervention by the central banks, and yesterday you can see the sell-off there, and then the market moving to the upside with minor pullbacks all the way following the Dow. And like I say, overnight the market's continuing to move higher. I just want to go back to Friday because that was the last alert that I recorded. I did the trades on this, went short and had a stop down at the lows, profit taking stop, and then went away and then came back yesterday to find out that those trades had been stopped out, which was good. However, I left at 1 because I was adding them as the market dropped and forgot about it and ended up with a £300 loss. Well, still have the position on at the moment, which is still 300, but that said, if we just have a look at the profits for last week, it's not a great deal. Here we go. So last week's profits were 3,592, profit factor of 10.4, and 66 to 33 thereabouts, give or take. So there's an advantage in being able to put the trades on, go away, not sit in front of the screen, because you can't get emotional about what's going on and then come back and find out either you've taken out at break even or you hit the profit target. And of course there's always the frustration that it came within a couple of ticks of the profit target, then rallied all the way back, but that's the price you pay with trading, unless you have a trailing stop, which you can put in with IG and all of the other MT4 platforms of around 20 points as well, so you can actually do that. So yeah, a great week last week. Yesterday, so I've come back with a loss. As you can see there, at the moment we've got a floating loss of 337. Not a problem, I can just ditch that and soon make that up. So not a problem at all. And that's an error on my part, not checking that I'd covered all of the positions that I had on with the profit target. Okay, let's move on. Have a look at the S&P and the FTSE 100. And in the S&P, again, similar thing there. You see the market retrace, and interestingly enough, let's just have a look at this and see where we came back to. 62% retracement, and then the market's gone up. It's actually got back above the 200 MA there. It'll be wanting to get back above that 4,000 target as well, as much as it can. But we've also got a problem on the upside fib-wise, because we're just at that 89, which you can see there as well. In the 30-minute chart, again, you've got the sell-off with Credit Suisse, the buying in and support there, and off we go back to the upside, massive move there. In the FTSE 100, also putting in a lot of volume yesterday, making its way back towards that 200 MA as well. Fib-wise, we're looking at the 78 retracement there, 7443. And also tying in with that 200 MA there as well. 30-minute of the FTSE, again, we fell out of bed in the pre-market, cash market, see huge volume there, and then off we go, and also just about to take out yesterday's high as well for this market. In the currencies, GBP, JPY, sideways to higher overnight, but yesterday a big move as well. Again, you'll see we've got an 89% retracement in this market, or thereabouts, bang on 89, as the markets come back. And on the upside, from this high back down, you'll see at the moment we're in the sort of 78 range there, and 89 as well. So in the 30-minute chart, you can see the volatility. It covered all sectors yesterday. Market then rallying up as well, going back through Friday's low and retracing more or less 100% there. Let's just have a look. Yes, 100% retracement. and then down overnight, but just coming back above the close and heading towards the high there. In the pound, the market up yesterday, dollar down. You can see it's down overnight, though. We've got a bit of resistance across to the left there. And in the 30-minute pound, again, you can see how the market, again, that volatility, then making its way to the upside overnight. So the market down, trading to the DP and the 50 EMA, and now trying to make its way back to the upside there. So in the US dollar, down yesterday in the 30-minute chart, finding a bit of support overnight and trying to move back. Let's just have a quick look at the daily chart, see where we are. So there you can see the sell-off in the dollar yesterday, or the last few days, and then trying to find a bit of support overnight. Going to be waiting for the FOMC meeting minutes tomorrow night as well. And in the metals, silver down overnight, up yesterday, but again, bit of weakness around there. It still staggers me that it's so cheap. Yesterday, you see the market up, then back to the DP, and a small retracement in there, moving back up, and then overnight we're down, retracement, and now moving to the downside there. So yeah, bit of weakness around in the metals at the moment, and in the gold market. You see this yesterday trading up to the 2,000 level, being hammered down. No surprise, they don't want to keep this above $2,000 an ounce, so watch that level. There you'll see the selling coming in soon as USB took Credit Suisse and it was announced. And then monkey hammered all the way back down, and now starting to show some weakness there as well. And finally, in the gold silver ratio, just move the chart across. You can see there that we're more or less sideways with this at the moment, around the 88 level. Okay, that will do it for this one. Let's see what the market does today, see whether it can maintain its upside momentum. Now, this so-called crisis is put to one side again. It's going to be temporary, that's for sure. It's not over by a long shot, but you can see how determined they are to bring the stock markets back. They should be collapsing, but reminds me very much of 2007, 2008. We had the first wobble in 2007. By 2008, the whole thing imploded, and I wouldn't be at all surprised going forward if we don't see that happening not too soon. Okay, that's it for this one. As ever, thanks for watching. See you in the next.